All right, folks, this is the part 4 of the weekly market recap that we had throughout this week. And as you can see, this is a part 4. There's a lot of parts that we have because if I cover all that in one video, it'll take too long. And I'm not going to be able to cover all of them. I'm going to be gassed. I'm going to be geeked. So on Thursday, this is the part 4 of the weekly market recap. On Thursday, we had a shorting trade here. We missed the setup because we were trying to enter the threshold, but market didn't impulse him to the downside, so it doesn't make sense for the market to go back up all the threshold. So entering on the Model 1 itself is fine, but I thought the Model 1 was right over here. But you gotta go around this. So this one will give us a 2RR. We could use this other Model 1, the first candle, as our entry, put right over here, and just go for a 2.7 RR gain, which eventually it'll get tapped and go in lower, but market never tapped the threshold here. See the market from here never tapped the threshold, it just went lower. And now on Thursday we were bearish, right? We were overall bearish on Thursday, and Friday we were bearish as well. So on Thursday we had a daily to the downside, a midweek reversal, SMT, premium IRL to your premium IRL discounted ERL. Right now currently we have a premium IRL to discounted ERL. I bet you can go from discounted ERL, go back to all the premium IRL right over here. Eventually go to the longer term draw and liquidity. Now, on the lower time frame, we have the market concept to the downside. We had a SMT. We had a New York Rotor Profile 2, 5 AM inclination, 9 AM mid position, 1 PM expansion. We had a 4 hour key level, which is 4 hour order block. We had a overall bearish order flow with a premium daily range you want to sell. And we have a lot of context here. So now go to the 15 time for the execution. For the setup, Model 1, and to execute the setup. So since Saturday, we're reviewing the week. So looking back to this, our entry, I didn't have to come all the way to Saturday to look at back at the market like, okay, yeah, I'm supposed to enter the threshold. I mean, that threshold was supposed to enter the Model 1. Right when the trade happened, I was like, yeah, I'm supposed to enter the Model 1, which, lesson, right? So on Thursday, we literally finally did not fucking had a FOMO problem. We did not FOMO win. I was like, didn't tap my entry, I might enter the trade. We did not have a FOMO problem because Monday we had a FOMO problem. Tuesday we had a FOMO problem. Wednesday we had a fucking FOMO problem. Like, not a FOMO problem, being fear of missing out the setup. It was a fear of missing out the, of the Model 1 or the entry getting tapped. That's what we had the problem of, which will never happen again. It would never ever happen again. It was a really rough week for me, which will definitely be fixed, and we're not gonna make the same mistake next week, go and forward on. But how did I miss the setup? I was looking to enter the threshold because the body, you can see it over here, the body was thick. The market was, the Model 1 is thick, so it makes to enter the threshold, as well as it was just a wide stop loss, and the RR was very off. So if I were to enter from here, just for the Model 1 itself, the RR is like 1 RR. I can't take the 1 RR. It must be a 2 RR and above. So I was looking to the threshold, but because the reason I was looking for a threshold was primarily because the body was big and thick. I thought the market was going to go back to the threshold, go lower, but market did an impulsive move to the downside. And as you can see, market did an impulsive move to the downside, and it didn't make sense for the market to go back up all to the threshold, then go lower, because the market makers are losing too much money on this point. So it logically doesn't make sense for the market to go all the way back up to the threshold. So we can bypass the threshold entry and enter on the Model 1 itself and go for the same take profit. So my Model 1 right over here is this candle. But since this candle is now for a 2 RR, we can use the other Model 1, which is this candle, as our entry to short it down to the drawn liquidity. It's right over here. And as you can see, as you guys know, on Thursday and Friday, we only have one take profit. What do we have? Only one take profit on Thursday and Friday. So we don't have a greed problem, and market needs to go at a fair price. And so on Thursday and Friday we make a full amount. make full amount of our trades. We don't make, no partial or nothing. We're just making full amount of our trades here. So if we're not gonna make anything less than 2% RR. We're not, because when you do partial, you mess up with the RR. So yeah, that's why we're doing that. That's why we went for one take profit. That was no longer a problem. But right over here, the problem was, the lesson of this trade is, when we're supposed to hit a threshold and the market doesn't impulse to the upside or downside, and it doesn't make sense for the market to go back all the threshold because market is losing too much money at that point. It doesn't logically make sense. We can enter the Model 1 itself, which must offer a 2RR and above, and target the same goal. How do we bypass the threshold if the market doesn't impulse to the downside or upside, and it doesn't make sense for the market to go back over the threshold? We can enter the Model 1 itself, enter the trade, and go to take profit. So in this case, our Model 1 is over here. We should have entered all over here, but then the RR was very off, so we could use the first consecutive the Model 1 candles and use that as our entry. When there's consecutive, like I said, 3 consecutive candles on that, as I said, it still depends on the RR here. What's the RR on the consecutive candles? If the consecutive candles over 3RR or 2RR and above, you can take it. But if it's 2RR, just enter the, and you have ways of entering the trade. In this case, I entered in the first candle, which was I was gonna offer as a 2RR and above, which this one did get tapped and did win lower, but I missed it out because I was entering the threshold. I was literally waiting here for it just to get tapped, which it never got tapped, and eventually went down lower. So the lesson of the Thursday trade is to, when I'm supposed to enter the threshold, market has a big impulse move to the upside or downside, and it doesn't logically make sense for the market to go back above the threshold, I'll enter the Model 1. The Model 1 that offers me a 2RR and above, and target that. So yeah, and our stop loss is going to be the body of the Model 1. Why? We're doing the damage part to the story, and because since it doesn't make sense for the market to go back up all the way to the threshold, the body is a good stop loss to put it in as. So yeah, thank you for watching. Make sure you guys like, comment, subscribe, share, and I'll see you guys later. Peace out.